Hello amazing traders, welcome once again into my screen. Today I'm going to be breaking down US oil charts starting from the monthly time frame as usual, as you all know. So today on US oil I'm going to be expecting a sell, not just today. I'm going to be expecting a sell opportunity on this particular pair. So I'm going to be breaking it down as usual, starting from the monthly time frame down to the lower time frame, so you all can follow me as I break down these charts and down to my entry and what I'm going to be explaining, I'm going to be expecting on this pair and how I'm going to be catching it, my first take profit and my second take profit, blasa. So let's go to the monthly time frame where we are going to be doing our top down analysis down to the lower time frame into our entry time frame. So here we are on the monthly time frame. Looking at the monthly time frame, looking at left, you could see that the market has been looking something. You can't be able to anticipate what actually, if this market is bullish or bearish, but just hold on as I break down these charts very easily, starting from this point here. So I'm going to be using my part 2 starting from here. You could see that this market created a double bottom. So this double bottom was the one that was a catalyst. It was a factor that made this pull, that created this impulse leg to the upside. Coming to this point here, couldn't break it to create an all-time high, came here and created a equal high. So as it came here to create an equal high, it now brought out another pin bar at this point. Now brought out a bearish engulfing candle, another bearish engulfing candle. So looking at this thing, I'm anticipating markets to drop, at least come back to this point again, or come back to this point again, depending. So looking at this price action from this candlestick and from what I could see from here, I could see that this market is bearish. I could say that this market is bearish, but though I'm not saying that it is totally bearish. If you look at here, from this place here, dragging our trend line from the left hand side down to the right hand side, you will see that the market cleared out this point here, turning the market automatically to bullish. Look at it, market has been creating highs, lows, higher lows. Now it came and created an equal top. Because of this equal top, the market pushed it down. So we're expecting market to at least come back to this point. Maybe the market did the same thing as expected, but we are still expecting market, based on the price action on the lower time frames that we are going to be uncovering very soon. We're going to be expecting market to come to this point here. So let's go to the monthly time frame, the weekly time frame. Looking at the monthly time frame, market is currently bullish, but based on that candlestick and the double top that market has created, the market is mid-term bearish. I repeat, the market is mid-term bearish. So I'm going to be going to the weekly time frame. The weekly time frame, I'm going to be checking if actually that point there, that candlestick gave us a chart pattern. If that candlestick gives that candlestick that occurred, that formed at this point here, creating a double top or equal top, then we know that market is going to start heading down. Automatically, it's going to be bearish. So that is just the analogy behind our strategy. So I'm going to be going to the weekly time frame next. All right, now we are in the we are in the weekly time frame chart. Looking at here, from this point here, you could see that market created this impulse leg. After creating an impulse leg, it retested back to this point. This point was a Fibonacci fib zone. This point caused the push to the upside. If you looked at here very well, you could see that it is a Fibonacci fib zone, in which, aka the Willy zone, which occurred at this point here, that caused this market to rally to the upside. It caused this market to rally to the upside. Did you see the golden point, Fibonacci golden point there, the 60 Fibonacci point there? That is what caused the market to rally to the to the upside. But we found out that the market couldn't break to the high, couldn't break. Now this point here was higher than this point here. Whenever you see this, I always like repeating it in my chart. That is signifying that the market wants to start reversing, or the market wants to enter a nasty range. That is just the two things. So looking at here, you can see that market has created a double top, broke out from the neckline, and now retested back to this point. Now using your Fibonacci level from that point now, signifying, because we have seen a chart pattern, and the chart pattern signifies a reversal, a chart reversal pattern signify what? Market was no longer interested in the direction where it was going before. Now what do you see? The market came back to this Fibonacci level, and that Fibonacci level is also a key level which have been tested multiple times. If you look left, you could see the multiple touches and so forth and so on. So with this analogy, we can anticipate the market to come to this point here. Our first take profit is going to be here. It's going to be the 100% retracement level, which intersect at this key level, and the 100% the 0.7 the 0.27 retracement level, which is also going to be our second take profit. So if the market should clear this key level, then we are going to be anticipating market to come to this place. So you all know the drill. If market should come to this place, we're going to be taking 50% of our 50% of our capital, taking the remaining take profits towards the remaining stop loss to break even. So that in case market should take us out, that means we were wrong. Or even though the market wants to take us out, that is better to be defensive in the market, because the main thing in this market currently is what? Capital preservation. So we are going to be going to the daily time frame to make more meaning out of this. All right, so welcome once again to the so we are currently in the daily time frame. Now looking at the daily time frame, what could you see? You could see that the head and the double top were formed very clearly, and there's also the Willy zone. The Willy zone had the confluence of the Willy zone was also what? Present. We have our Fibonacci, we have our trend line, and we also have our resistance point. Now dragging from here, was it from here or from the other point there? I think the high above there, that's what I think it was. So from here to here, yeah, that's what I think it was. Yeah, from here to that point there, you could see it very clearly. Then we have trend line, we have Fibonacci, we have trend line, we have Fibonacci, we have support. All are in play. So this was and we also have bearish engulfing candle. This was the bearish engulfing candle that bounced out from this point here, showing that this is a very high value point of interest that market is going to continue its sell. And this is the factor also that's going to cause the market that we are going to be catching the sell down to this point. Yes, because this is a double top. That is one factor, one confluence. Two, trend line, Fibonacci, resistance, and bearish engulfing candle. So these are all the confluence that we need to sell this market down to the downside. Are you getting me? So with all this analysis now, I've in between less than 20 minutes, I've already analyzed this market. Though there is one concern about this gap here. I don't like it. Maybe is the broker I'm trading on. That is the server I'm trading on I'm using to analyze my chart. I'm using as my chart on TradingView. It depends, but I don't know. I'm going to go and verify. If this gap should be at this point there, then I may likely not trade this. But if this gap is a normal one candlestick from the above here down here without a gap, then I'll be trading it. So I'll be going down lower to the to the 4-hour time frame, which is our entry time frame. Alright, so on the 4-hour time frame, what can you see? You could see that the market was creating series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then it immediately changed direction at this point here. It was creating series of higher highs, higher lows, higher highs, higher lows. So I'm going to be using my chart tool, my path tool here for you to see and understand what I mean. The market created high, low, higher, higher low. Remember, this is where it shifted structure from this point. Higher low, higher high, reacted on a key level, higher low, higher high, pull back to the key level, higher high, then came back here, created something like a head and shoulder. That does not matter. then came back here, broke out from it, faked out, came back up, retested back on the what? On the key level. Now went back up again. Now currently moving back down. So at this point that this market did, that's when the market shifted structure. So we had how many confluence on this particular time frame now? We have one confluence whereby the market broke this upside shifting structure and also broke this internal point here, shifting structure, because the market broke out from this place here automatically to shift structure. That is one. So still the market also broke this place to shift structure. So the market pulled back down, went back up, broke up again, then what? Break back down. So this is a shift, clear shift in structure. So what will I be expecting? I'll be expecting something like a further push to the downside, then a retest back to this point, then another shift of structure. Once I should see this kind of thing, you all know the drill. Let me drag it very well. What I'm going to be expecting, I'm going to be taking out this. So I'm going to be expecting nothing less than this, nothing less like this. Why am I going to be expecting it? Why am I not going to enter so quick like this? There are main reason why I'm not going to be entering so quick. Why? One reason is that I want to buy at the best price. That is one. Two is that based on my entry, the market may likely reverse based on do all this confluence that you saw here are in play. The market may likely reverse and start going back up to the upside. Remember that the market is just breaking out from this point here, so the market can just continue start rallying down up to the upside. So I'm expecting a break retest continuation. Once I should see that, then I'm going to put my pending my short tool around that side there. I'm going to be shorting the market. Don't mind me, it's like I'm catching cold. The weather is very cold. You know, we have entered the month of August, so it's a period of rain. So I'm going to be waiting for something like this to form, and I'm going to leave this thing here. Then at this point here, I'm going to place my order at that point there. So when the market should pull back to that point there, then it's going to trigger my entry. So this is what I'm going to be expecting on this particular pair. If I don't see this, I'm not going to be taking it. So something like this, a 1 to 2, 1 to 3 is enough. This is what I'm going to be expecting, though this is just a rough estimation. Then I'm going to be swing trading down to this place. It's going to be a 1 to 5 risk to reward. So that is what I'm going to be expecting on what? US oil. So if you like this content, please make sure you like, subscribe, and have a nice day, and wishing you all the best. Until when the entry has formed, I'm going to be posting it on my Telegram channel. If you have not joined my Telegram channel, then you're missing a lot. Please make sure you go to the description part below and check for the URL and click it, and make sure you join the community. And make sure when you join the community, you're going to be welcomed properly because you are a VIP. Have a nice day once again, and bye.